What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode we'll be doing another stock market technical analysis update, and we'll start out by looking at the ticker symbol SPY, which is the SP500 ETF. But first, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along on all of my updates. Now let's go ahead and crack open these charts and see what's going on in the stock market today. Alright, so if we zoom in on today's price action, we can see that we had a nice gap up in the morning and the price was kind of hanging around with going higher and then ultimately closed down right on our 5 moving average. So if we go to a 1 hour chart, we can see that the price action was going above our previous all-time high and was looking very bullish. And then in the last 4 hours of the day, we had this nice little sell-off to close the day. Now remember, going back to a daily chart, one bad day does not set a trend, so we really need to see what happens with tomorrow's price action to see if this downward move is going to continue. Now, as long as the price is at or above this 5 moving average, that's still in the extremely bullish trend camp. And we still have the 5 EMA above the 13 EMA. So even a pullback to go down into the 13 EMA or even the 20 could still be a very healthy pullback before this upward trend continues. However, we do need to acknowledge that we're reaching my upper price target for the 5th wave, which is this $341 range, and we were only about a couple of dollars away from hitting that price. So nothing is 100% guaranteed in the stock market, and we very well could have seen the high for now. But right now, it's too early to say that because we only had one day, which brought us down to the 5 moving average only. That's not a very bearish sign at all. However, if we do see continuation to the downside, we're going to have to consider the fact that these gaps are possibly going to be closed very fast. So if you remember, I said the stock market likes to take the stairs up and the elevator down, and we could see that the market has been climbing up very steadily, making this sort of stair-step case. And we do get these sell-offs that could happen very quickly. So right here, we see these gains that took many hours to accumulate only took 3 hours to erase. So we see this trend continue that we've been hiking and grinding higher and higher. And at any sign that there's going to be selling pressure in this market, we could easily see price action come down very quickly to close these lower gaps before finding support and bouncing. Now, I'm not saying we're going to come down and close these gaps, but we need to consider every option and every possibility right now. And when we look at this price action, we do see a sign that we're reaching a price target, which is ultimately going to lead to a 3-wave correction. So right now, with the price closing on the 5 EMA and the 5 EMA still above the 13 EMA, this market is still very bullish. And I'm looking for this upward trend to continue until we see some sign of a reversal. And one day is not enough to say that we have reversed from a high. Now let's jump over and look at the Nasdaq 100, and we see we also had a red candle. However, we actually closed above the 5 EMA. So with the Nasdaq 100, we really need to see the 5 EMA start to head south and start testing the 13 EMA for a crossover to the downside before we become bearish. Now we still have the price target on the Nasdaq 100 at $280. And again, today's high on the Nasdaq 100 was about $279. So only about a dollar or two away from our price target. So we are getting very close to our price targets, and we do expect to see this sort of ABC correction once we hit our price target. So keep in mind, there is some downside risk to this market, and there is going to be a dip buying opportunity coming in the near future. However, we don't have a crystal ball, and we're not knowing exactly when that's going to be. The market could continue to grind higher for many more days before we ultimately see that correction. So right now, we're going to continue to remain objective and watch the price action and watch the technical trends, which we still see we're closing above the 5 EMA, and we still have this very bullish trend in the Nasdaq 100 as well. So there's no real scares and there's no real warning signs to be concerned about right now. And we're going to continue to follow the price action before we determine where the next move in the market's going to come. Right now, all signs are still very bullish, and we're still looking to hit our price target about $280 on the Nasdaq 100 QQQ ETF. Now let's jump over and look at the Dow Jones Industrial, the DIA ETF. And remember, I stand by the fact that this move was very bullish and very monstrous, and we expect to see this pullback test support before ultimately heading higher. So not too much news to report on the Dow Jones. It's still taking time off the clock and digesting this move, and ultimately going to come back and test this breakout. Now, if this breakout acts as support and we see a bounce, that's going to be a very bullish sign. So look for that. Any failure to bounce at support, I would be looking for support at these lower gaps here and possibly look for a bounce there. So with the Dow Jones, there's lots of support below because we now have these 3 gaps. However, we're still waiting to watch to see if the breakout holds up as support before we consider closing these gaps. Let's jump over to the VIX, which is our fear indicator. And if you remember last night, I said the VIX actually closed higher even though the market went up. Now remember, we want to see the VIX go higher when the market goes lower, and we want to see the VIX go lower as the market goes higher. So yesterday was a little bit of a warning sign that there was some fear entering the market, and we do see a follow through with that fear today, with the VIX closing up almost 5%, up about 22.5 on the price level. Now a real indicator of fear entering the market is going to be this 23.5 level, and we do see that we're only about a point away from that level with today's close. So yesterday's warning side did turn out to be true, and we did see some fear enter the market again today. But remember, one day doesn't set a trend. So we're still going to watch the VIX to see if it heads back down towards that 18 level, or if it wants to continue to creep higher and break through this support level. That'll tell us to expect that correction sooner than we predicted. So let's jump over and check out some of the sectors. And first up is the financials. And we said look for the financials to digest this breakout and come down and test support before heading higher. And if we zoom in on today's price action, we actually had a nice confluence area where we had the 20 simple moving average and the support level kind of coincide and exist in the same exact price area. And we did see a bounce off that level today. You can see it a little better on the 1 hour chart. The price kind of came down, and you could see the wick of this candle right in this area before bouncing and closing higher. Now that's still not good enough to know for sure there's a bounce, so I would still wait for a nice green close above this support level. And then, like I said in last night's video, look for a bounce to the 20 simple moving average. This could be a very good high reward, low risk play, and it would be a good trading opportunity to jump in financials on the bounce and capture this move here, which is about a 5% move to the upside. So I'm still waiting and watching the financials to bounce off this breakout area, test the previous resistance as support, and ultimately head higher, carrying the S&P 500 higher as well. And if we jump over to the industrials, we did say last night that the industrials did close a little bit below support, and we did see a follow through on the industrials with that break of support and heading lower. So because we saw a break of that support level, we no longer expect that level to hold up as support unless we did see just a test and a fake out before ultimately heading higher. But look for this trend to hold up where we have this nice bullish trend line, and the price action could still come down in this area and bounce off this trend line before heading higher. So either way, the industrials are still forming higher highs and higher lows, and even though it may be a few more days of cool off before we see that bounce, the chart still looks very bullish. And if we're following the price action and we're following the technicals, we still look like we're very bullish in the industrial sector, which is good for the overall outlook of the S&P 500 continuing to go higher. Now let's jump over and look at healthcare, and we see healthcare doing something very similar where it broke out of the previous resistance and it's starting to find support at that resistance level, which is now acting as support. So we're looking for healthcare to hold up on this support level before ultimately continuing to head higher and continue its bullish upward trend. We still see the price action right around the 5 EMA, and the 5 EMA still above the 13 EMA. And we are starting to see the Bollinger Bands constricting and not looking as volatile. So we're really just watching the market sort of digest this recent gain and take some time off the clock before heading up to its next leg higher. So overall, all the sectors are still looking bullish, all of the bullish trends are still intact, and all of the price action looks completely normal and nothing out of the ordinary just yet. Jumping over to the US dollar, we're looking at DXY here, and we do see the dollar had a sign of strength today. So remember, any sign of strength in the dollar is going to lead to correction in asset prices, and any weakness in the dollar is going to continue to inflate asset prices. So we did see a breakdown of this previous support level in the dollar yesterday, and today we did see a nice bounce. Now it's too early to say if that bounce is going to continue to the upside or if it was just a temporary cool off from the downtrend before ultimately heading back down. So we'll continue to watch the dollar, but right now the dollar is still looking very weak, and we don't expect that to change anytime soon. Now it's worth noting we did see a nice sell-off in gold as well as a little bit of a sell-off here in silver. So ultimately the markets are really just digesting some of the recent gains, and we're seeing a little bit of a sell-off all around. Now as the dollar strengthens, we would expect to see gold and silver have a little bit of a sell-off, so there's really no surprise there. So we'll continue to watch the dollar and can continue to monitor if it's going to remain weak or if we're going to see some strength returning to the dollar. Jumping over to Apple, we really didn't see much happen today with Apple. We did close above the 5 EMA yet again, but as I keep saying with Apple, we're really just waiting and watching Apple to lead the way on the correction because it's a market mover. Now Apple is very stretched, and I'm still expecting to see Apple come down, close these gaps, and bounce off support before heading higher. So as we start to see Apple roll over and we start to see this correction come into place, we will expect to see a correction in the greater indices as well due to Apple being a market mover. Apple holds a lot of weight in a lot of these ETFs that we're doing analysis on. So seeing Apple continue its strength and continue to close above its 5 EMA is only furthering the technical analysis that the prices are going to continue higher. We will see some weakness in Apple before we see the indices correct and come down from their newly found all-time highs. But right now, Apple still looks very strong and the price action is still looking very bullish along with the trends. So if you zoom out on the S&P 500, we still have this very bullish upward trend. We're still trading well above the 13 EMA and the 20 simple moving average, and the price action closed above or right on the 5 EMA today as well again. So as long as this 5 EMA stays above the 13 and the price action continues to close above these areas, there's a very bullish trend and we're expecting to see higher prices. As bears flock in to short this market with all the bearish sentiment and money on the sidelines, we could expect to see a squeeze from these levels and head higher. So no reason to become bearish on this market because we had one little down day today. And we're expecting to see these upward trends remain intact until we see some other sign of reversal somewhere else. But right now, all the indices are aligning with the bullish trend, and the only thing we're seeing is a little bit of fear on the VIX. So we'll be here tomorrow to update you and let you know if any of this changed. So if this video helps you out, please remember to smash that like button and subscribe to the channel if you want to follow along on all of these technical analysis updates right here on the Stocks channel. So thanks for watching, and as always, I will see you in the next episode.